Good morning, everyone. Respected dignitaries, distinguished guests, friends from IFCA, and colleagues from across the PEVC ecosystem. It is a real pleasure to address this important gathering and to be with the investors and the innovators who are shaping the next phase of India's growth story through your capital, capabilities, and long-term commitment to the country. India's growth outlook is resilient, with the World Bank Group projecting a 6.5% real GDP growth in 2025, supported by the infrastructure capital investment, resilient consumption, and FDI inflows into manufacturing and renewables, creating a strong runway for private investment aligned to sustainability and productivity, and supporting India's broader Viksit Bharat 2047 vision. However, developing countries face an annual $4 trillion sustainable development gap financing gap. So public budgets alone cannot deliver India's infrastructure, services, and inclusion needs at the required scale and speed. Private capital mobilization needs to be scaled up. For India alone, recent estimates point to an Sustainable Development Goals financing gap of roughly $290 to $300 billion per year, while meeting India's national determined contributions is expected to require around $2.5 trillion in climate finance by 2030, about $170 billion annually, with current green finance flows covering only 1/4 to 1/3 of this need. Also, India's MSME financing gap is estimated at about $333 billion, constraining supplier upgrading, formal job creation, women-led enterprise growth, and rural livelihoods. Closing this requires flexible equity and private credit, not just traditional loans. Hence, a developed private equity and venture capital market is mission critical. Mid-market firms and MSMEs need growth equity and private credit to deliver sustainability, circularity, and productivity gains that translate directly into quality jobs and, critically, new green jobs. Let us look at India's private equity and venture capital market. It is obviously experiencing tailwinds from technology to supply chains to semiconductors and artificial intelligence. India's PE and VC market rebounded to about $43 billion in 2024 across 1,600 deals, restoring capital depth for growth, venture, and private credit. UPI now clears over 20 billion transactions a month, with values of 24 lakh crores or about $270 billion, compressing transaction costs and widening access for MSMEs and platforms. Aadhaar also covers 99% of adults, enabling eKYC and trusted digital onboarding. ONDC has expanded across 600 plus cities and multiple categories, extending national scale demand rails. And semiconductors are moving from vision to build out, with cabinet approvals including Tata PSMNC's fab at Dholera, the TSAT OSAT in Assam, alongside Micron's Sanand facility, and subsequent approvals that deepen the supply chain base. AI compute capacity is also scaling under the India AI mission, with 10,000 plus graphics processing units via PPP arrangements and additional tenders adding thousands more accelerators underpinned by a rapidly expanding network of energy-efficient data centers as a new core infrastructure asset class, supporting domestic large language models development and advanced manufacturing use cases. How is IFC and the World Bank Group already helping? Well, through capital, structures, pipeline, and standards. The International Finance Corporation has been investing in emerging market private equity since the late 1980s, and now also operates a dedicated startup and venture capital platform that spans the full life cycle from seed to growth equity, including IFC Startup Catalyst, SME Ventures, venture capital funds, growth funds, and private equity funds. India today is IFC's largest portfolio globally at around 10.6 billion, and that represents about 11% of IFC's global portfolio, reflecting a deep, long-term commitment to India's private sector. IFC's India annual new commitments have quadrupled from fiscal year 22 to about 5.4 billion in fiscal year 25, which ended last June, with a strong emphasis on innovation, inclusion, sustainability, resilience, and gender. And our ability to mobilize partners with us has risen by about 11 times, from $311 million in fiscal year 22 to mobilizing $3.4 billion in fiscal year 25, crowding in private capital at scale for India's priorities. Expected income, just to give you an example, from only last year's investments that IFC is doing, last fiscal year, which is fiscal year 25, over their project cycles as these investments complete, will generate 623,000 direct and indirect jobs, 341,000 affordable housing loans, and lending to over 260,000 MSMEs and close to 10 million micro borrowers. Specifically speaking for the private equity venture capital, IFC has about a $1.5 billion portfolio across 70 private equity and venture capital funds and co-investments in India, and have driving growth in program delivery and mobilization. IFC's private equity and venture capital commitments in fiscal year 2025 in India were over $1 billion, up by 400% in the last 3 years, showing the strong role played by IFC and the great potential of the Indian economy. 100% of our private equity investments are gender tagged, ensuring gender equity both at the fund and the portfolio client levels. IFC recently backed managers like Everstone, Motilal Oswal, L. Chatterton in the private equity space, Trifecta in the venture debt space, Arcam, Alchemy in the early stages space, and more to come that will be announced as we close these future transactions. Between direct and indirect investment, 18 IFC-backed companies in India have already achieved unicorn status across sectors such as e-commerce, online pharmacy, insurtech, health insurance, logistics, housing finance, and capital markets, underscoring IFC's early mover and catalytic role in tech-enabled growth. Across our private equity venture capital and venture capital debt relationships, IFC continues to play a crucial counter-cyclical long-term partner role, bringing not just capital, but governance support, strong ESG and gender lens expertise, global networks, and policy engagements, so that strong founders and managers can build durable businesses through cycles. We invest directly and indirectly through equity, quasi-equity, debt, and long-term finance to funds, NBFCs, and platforms. And we already deploy anchor commitments, co-investments, blended finance, InvETs and REITs, credit-enhanced bonds and securitizations, as well as working on risk-share facilities, all under a robust environmental and social and governance standards and public-private partnership structuring expertise. IFC's private equity and venture capital clients also benefit from crucial advisory support that strengthens their technical capabilities on areas like climate-related disclosure management and capacity development to help clients participate more confidently in emerging fields like carbon credit markets. IFC also recognizes IFCA's strong convening role in bringing together all stakeholders, like managers, LPs, policymakers, and ecosystem partners. And IFC will continue to work with IFCA to surface industry insight, share global best practice, and build a coherent market voice around sustainability, circularity, governance, and long-term capital formation. As part of a One World Bank group, IFC works to translate the World Bank's policy and institutional reforms and upstream preparation into bankable, scalable pipelines that de-risk entry and expansion for LPs and corporates. We continue to apply our global IFC experience in India so that our engagements deliver strong financial and non-financial additionality, along with maximum development impact by anchoring high-quality, experienced as well as first-time managers to accelerate closes, attract both domestic and international LP participation, and blend concessional capital where risks are higher or first of its kind. Partnering with banks and MBFCs through risk-share facilities so sustainable MSMEs and mid-market portfolios can scale without overstretching their balance sheets. And aggregating distributed assets into InvETs, REITs, risk-share facilities, and securitized pools. Embedding the IFC performance standards to create institutional-grade portfolios, stronger valuations, sustainability, and better exit outcomes. And we also take the best of our experiences in India as a lighthouse for other developing countries and the world. Further, IFC continues to also convene and channel LP voices with SEBI, facilitating candid discussions among global and domestic LPs and managers on alternative investment fund norms, disclosure, reporting, etc. So the regulatory environment is always predictable, scalable, and LP-friendly. We also recognize and appreciate the leadership of the Government of India, particularly the Department of Economic Affairs and the Ministry of Finance, SEBI, and RBI in driving forward-looking reforms and steadily strengthening private capital mobilization, enabling regulatory frameworks and public-private dialogue platforms and mechanisms across the different sectors, where IFC has been humbly honored to be a partner and contribute as an active and constructive stakeholder in these mechanisms. India's scale, resilient growth outlook, evolving private equity and venture capital ecosystem, and rapid diffusion of technology and digital public infrastructure together create powerful tailwinds for private investment aligned with sustainability, circularity, productivity, and resilience, as the case study of IFC clearly points out to. IFC, working as part of a One World Bank group, stands ready to anchor and co-invest, blend and share risk, structure the public-private partnerships, and work in close partnership with the PE/VC managers, LPs, and policymakers so that private capital can deliver more and better jobs, inclusion, and productivity at scale, mobilizing private equity venture capital for a green and job-rich India that achieve its Viksit Bharat by 2047. I wish all the participants very constructive and forward-looking deliberations over the course of this two-day summit, and I am sure that the rich discussions here will spark new ideas, partnerships, and investments, and take India's private equity venture capital ecosystem and its development impact to the next level. A special thank you to IFCA for bringing us all together and for the continued leadership in convening and strengthening this ecosystem. Thank you.